Hello again, welcome back to the channel. I'm Mr. Fox coming to you from DIGIFOX Labs. Now, we have been gone for quite some time, but a lot has happened since us being gone. Wow, what a doozy. Now, none of this financial advice. We are not financial advisors. Everything said here is 100% our opinion. So let's get right into it. What we're going to be talking about is Japan and the yen. That's right, their native currency. And we see that it is actually collapsing, and they are in the news, or have been at least for the past week. Quite massive news, as it will have ramifications felt and seen around the world. Coming to you from Bloomberg, let's go ahead and get rid of that. There we go. Coming to you from Bloomberg, we see here that the Japan bonds face liquidity stress as the Bank of Japan walks lonely rates path. So what does this all mean? What are they talking about here on Bloomberg saying that they walk a lonely rates path? Well, come to find out that they are currently the only ones doing what they are currently doing, which is they are selling U.S. Treasury bills, bonds, and all the likes, the securities. And we see here that the spreads have widened to 6-month high across all tenors. And the BOJ, which is the Bank of Japan, is set to announce policy decision one day after the Fed. Now, unfortunately, we are not subscribed to Bloomberg and it is blocked out. But we can go to other news articles. And coming to you from Fox Business, we see here that the yen collapse forces nation to reopen for travelers. That's right. The collapse of their currency is forcing Japan to lift up some of the stringent bans that they had due to the that we have all been facing here as the past 2-3 years, something of that nature. And so we see here the reason they're doing that is to help with the economy, which is very sluggish. They want foreign money to come into the country to help spruce up their local government, their local economy. And we see here that the country is facing a possible collapse of its national currency, according to the Fox Business. And let's just go ahead and read some things here. And it says here that Japan until recently has all but completely rejected foreigners seeking entry or re-entry into the country. The dramatic reversal was announced as the Japanese government struggles to keep the yen from further collapse. We also see here that the yen fell to a 24-year low point last week, its value plummeting to a mere 144 yen compared to the United States dollar. And so we see here, coming to you from Google, let's see how much it's worth. $1 equals 144 yen. Now, we see that on this graph going all the way back to February 18, 2022, that it has been nothing but short of a massive hockey stick in terms of the value of the United States dollar compared to the Japanese yen. And this is on a 5-year table, and we see here that it's been pretty much stagnant going back roughly around 5 to 10 years. And if we pull all the way back to, say, the 80s, it looks like it's forming what is known in trading term a cup and handle. So there might be more room for this to run in terms of how much yen you could accumulate with your United States dollar. We could very well see that $1 buys you 200 Japanese yen. Now, again, this is not speculation. This is speculation. This is not financial advice. Now, if you are a Forex trader, there possibly could be an opportunity for you here in the next couple months, maybe even a year. Just pretty much holding on to your position in terms of the United States dollar compared to the Japanese yen and going ahead and hitting the sell button for either one. Now let's go back to what we see here from NASDAQ. You can see here that I have a bad issue of saying that. Japan bond yields drop as the Bank of Japan quashes policy speculation. Now, all of this may seem like a foreign language to you, and so we're going to go ahead and give you a quick little update summary as to what exactly is going on and how this can affect every single individual watching this. But first, let's go ahead and look into the charts. We see here, coming to you from TradingView, let's just wait for this to pull up, shall we? Whoa. All right, here we go. We see that the Japan and USD valuation, it has taken quite a dump. And it looks like the dump is far yet over. Now, this is on the weekly time frame, okay? And so for those of you that are traders, we see here that it has not seen this low probably since 1998. And so that goes with the correlation coming to you from Fox Business News. Remember, they said 25 years. So we're looking at like roughly around that time frame when we saw the lows of the valuation between the Japanese yen and the US dollar. And naturally, we did say probably about a month ago, keep an eye on the DXY because we have a double bottom that formed. And we see here, we made this chart about a month ago and we circled the double bottoms and we even gave you a Fibonacci retracement. And it is currently sitting on the DXY at the 1.618 fib level. Whoops, we just moved it by accident. And it's literally stopped. And this is on the weekly. Now, can we see this keep going and continuing all the way up to the 2618? We don't know, but we could go ahead and give you some sort of speculation. Let's just go ahead and draw some lines here for you to see if that is a possibility. Let's go ahead and mark this right there. Let's bring this down a little bit further so we have more room. And then let's go ahead and mark this right there. So we see here that it's actually forming a little bit of a channel. Some would even say that it is forming an ascending wedge, which would mean that there is going to come a retracement. Where that retracement could go, well, the first level is going to be around this area. It will retest that area, which is going to be the 107, 108 area if you're a Forex trader. Now, as we indicated earlier, what is a treasury-backed security? What is Japan selling? Well, according to Google, we see here that it is a U.S. Treasury security are issued by the federal government and are considered to be among the safest investments you can make because all Treasury securities are backed by the full faith and credit of the United States government. And so we see that the securities and the treasuries are actually going to be bonds, they are going to be treasuries, securities, just things that the United States deems has some form of value to it, right? And in return for you purchasing that, they give Japan a certain percentage to do so. These bonds, these securities, Japan is selling on the open market. Why are they doing this? Well, they are doing it literally to try and buy back their own yen. So they sell these bonds, which they feel have no value right now in correlation to what their stance is on their own economy, right? So they go ahead and liquidate these bonds. They get United States dollars for these bonds. Then they get those dollars and buy up their own currency, taking them out of circulation, preventing hyperinflation, and then at which point will give their economy some form of a baseline. They currently have rates at or roughly below or somewhere around zero, and they want to keep it that way because we all know that Japan has been somewhat in a bit of a stagflation economy for quite a few decades. Now, is that going to turn? Is that going to give them an opportunity to get out of that? We don't know yet, but this literally is going to be something that is going to be seen around the world economically in every single country, because if Japan could do this and get away with it, which they are a good, massive, big size of a global power, why is it that other countries cannot do the same? Will Italy do this? Will Portugal do this? Will developing countries such as India, maybe even, maybe France or Germany may do this, right? We don't know. But if Japan could do it and get away with it, that is going to have huge ramifications for the United States in the long term. So that is what's going on with the news currently. None of this is financial advice. Happy days, happy trading, and good luck to you all.